We all know it, Bitcoin is a great long-term hold. It tends to appreciate faster than stocks, it tends to appreciate faster than gold, it tends to do better than bonds. But the problem is that Bitcoin is also relatively illiquid. And with that comparably low liquidity, we see a lot of volatility, as in the price can shoot up a lot and it can crash a lot. And so even though we see higher highs and higher lows, if you buy into Bitcoin at the wrong point in time, if you buy in at peak hype, you can drop quite a bit. This is Bitcoin over the very long term. And we have seen crashes of 87% over here, 85% over here, and just recently, from the end of 2021 to the end of 2022, a drop of 77%. We don't see that much volatility in any other asset. And that begs the question, is there a way to time this somewhat? Is there a way to still outpace the already good return of Bitcoin by timing this, by buying low and selling high? Now here is how a lot of people answer that question. They might take something like the 200-day moving average and they buy in whenever the price is above to ride this nice bull market, and then they sell whenever the price is below to avoid crashes like this, at least partially. And according to that 200-day moving average, we would now be in the market. We do have our failed signals, right, where we buy in and sell again and buy in and sell again. But overall, this tends to do a relatively good job at determining whether or not we should be in Bitcoin or rather be out of Bitcoin. And yes, I have backtested that strategy, and yes, it tends to outperform just buying and holding. Crypto in general tends to move in trends. In other words, when the price tends to rise, it continues to rise. When the price tends to fall, it continues to fall. Of course, there's always a turnaround, but probabilities are always in favor of past returns. Now, here's the problem with that approach. It's not clear what's the best moving average over here. Because why are we taking the 200-day moving average? Why aren't we taking a different duration? Why don't we take, for example, say the 150-day? It's a bit closer to the price. In that example, we would be exiting a little bit earlier, right? Or why not go even closer? Why not take, for example, the 100-day moving average, where we completely avoid this crash? Isn't that somewhat arbitrary? This exact question that I just asked is how this channel started. I wanted to find out what's the best moving average for Bitcoin and how does the strategy in general perform? Is this a strategy worth pursuing over the long term? And the answer to this is yes. I have backtested all the moving average up to the 200-day and I've determined what's the best one, and I will share this here for free on YouTube. Have a look at the following Excel spreadsheet. The data starts in September of 2017. So that's over here. We still have the end of the bull market in 2017 in here. We've got the first bear market, we've got the recovery, we've got the subsequent bear market and another recovery in here. So plenty of bull and bear markets. That's the data of this sheet. Now over the time period, Bitcoin made annualized 26%. So the geometric average compounded, we got 26% per annum. And I built a macro to now run all of the different moving averages, simple moving average as well as exponential moving average. So we simply click the button and let the computer make its magic. A tutorial on how to build such a tool or how to adjust this for other cryptocurrencies is, by the way, in the premium membership. You can also download that here in the premium membership. It's thebitcoinstrategy.com. Link is down below. So let's wait until this is all done. And there we go. We've got the result. By the way, we're doing two things over here. We are betting on rising prices whenever the price is above the moving average, but we also short Bitcoin. We bet on falling prices whenever it's below. So we do both over here. We've got activated both longing and shorting. We start out with $1,000. We don't have any gas fees, but we've got an exchange fee of 0.2% per trade. And we can now see how trading according to the moving averages compares to buying and holding here on the right. And again, this is compounded every year. Now let's have a look at this in chart form. That's this graphic over here, simply just a table in graphic format. So on the x-axis, we've got the duration of the moving average all the way to the 200-day. On the y-axis, we've got the annualized performance. In turquoise, we've got the returns of the moving average trading strategy, the simple moving average. And in red, we've got the trading returns of the exponential moving average. Now, what can we see here? We can see that when we take too short of a moving average, we tend to underperform buying and holding. And that's, I think, mainly due to the trading fees. Once we cross, though, the 30-day or so, pretty much any moving average outperforms buying and holding. And the best moving averages are in this region between 110 and 140. The very best simple moving average is the one over here, the 120 day. And so when we go to TradingView, we just double click on our moving average, we enter 120 day. And this is what historically worked the best for Bitcoin. And this is how I personally time the market. This is how I decide whether or not I should go with leverage on Bitcoin or whether or not I rather take some chips off the table. I don't get that extreme as in the backtest, as in I don't short Bitcoin, but I definitely adjust my exposure. And I am above average exposed. I hold more than just spot whenever we are above the moving average. That's how I personally do this. And so this means at the current prices that Bitcoin could fall all the way down to 40,500 and I'd still be bullish. I'd only be bearish once we go below this. And this also shows us how nice this actually worked. I am in Bitcoin with leverage since middle of October of 2023. We went up since then by 86%. And I'm of course smiling, and I shared all of this, right? I shared my entries and exits in premium as well. Now, timing Bitcoin is not the only thing I do. I also track influencer wallets and try to ride the altcoin rally this way. Altcoins tend to outperform now, but still the majority of my money is in BTC, and simply timing this somewhat correctly is super, super valuable. And here it is for free, right? You can simply just open tradingview.com, get in the simple moving average 120 day, follow that and exit whenever the price goes below, or at least partially take some profit. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Link is down below.